Well, welcome to the podcast today. And as you know, we get the best people from around the country to come and talk to us. And sometimes over a couple of weeks, we can get 2 or 3 mortgage brokers. We can get 2 or 3 industry people who are very similar. But guess what? When it comes to money and it comes to mortgage broking, not everyone is the same. And every one of the people that we bring on here is an expert in their field. Good morning. And I'm going to say a huge hello to Chloe from MoneyQuest in Wollongong, Camden, Windang and Randwick. Am I right with that?
That's right, yep. So we're across 4 different offices with a large team to hold us all down. Thanks,
Yes. MoneyQuest are one of those people that you might not see advertised a lot, but they are a big player in the game of mortgages. And you can do everything from car loans to developer finance. But what you specialise in is mortgages for people getting their home. Am I right with that?
Absolutely, yes. So I'm the residential lending specialist here at the MoneyQuest team.
That's a big title, isn't it?
Oh, sometimes, yeah.
Sometimes. The big title also comes with big experience. How long have you been in the finance game?
I've been in finance now for around 12 years.
Wow.
So I've gone from banks to
Yes.
broker. And yeah, I really enjoy it. Some days it's hard and some days maybe it's not as fun as you would like. But I think that if you love it every day, then you're probably not pushing yourself hard enough for your clients. So
you are someone. I did do a bit of research and stalked you a little bit. Someone told me that you are very passionate for your clients and that you really, if someone can't get something done, they go, Chloe, and you had this knack of being able to get it over the line.
Yes, I think I have been referred to as a director of difficult deals a few times.
Yeah.
And certainly have some very passionate conversations with credit assessors and credit teams when we need to get everything moving for the client. So yeah, I don't like saying no. I don't like hearing no as a person, and I certainly don't like saying no to
That's not what your 3
clients.
kids have said.
Well, they like to say no to me a lot, actually. Yes.
So you invoke the inner mum when it comes to dealing with the credit people from the banks and the lenders.
Absolutely. Yep, the mum voice comes out. We get a stern talking to. And everyone gets a bit of an education sometimes. Absolutely.
And after knowing Chloe for quite a while, I think I'd do what she told me as well because, I think it'd be safer that way.
My kids don't, but thankfully some other people do. Yeah.
So we're actually going to talk about something a bit different today. A lot of people, as you know, are downsizing and they're needing to sell to buy and vice versa. And that can be tricky. And there are 2 types of people out there who are downsizing. One who have a mortgage and are downsizing to clear their mortgage or to have a smaller mortgage, have a better home, a smaller home that they can go away on holidays, still work. They don't need the big 40 square, 5-bedroom house with 2 cats and a dog and just them. They're going to get. And then there's the other people who are retiring or just slowing down a bit. And the biggest fallacy out there is downsizing means an over 55s. No, it doesn't. You don't need, if you're downsizing, that doesn't necessarily mean you're going to an over 55s. You can still go and buy your own small home and be in total control, not have to pay all the fees that go with it. And the government now has come out recently and they're actually encouraging people to stay in their home. But with that come challenges. And this is why I got Chloe in, because she's going to help us today and talk to us about a couple of scenarios. But first one is, if someone is downsizing and they're putting their house on the market, but oh no, they've just found the house that they really want, but they've got a mortgage.
Yep.
And they've gone, but I'm going to miss out on this house I love. I can get it for the right price, but our house quite hasn't sold just yet. We've got a couple of weeks to auction or we haven't. In that situation where they've got an existing mortgage and they come to you and go, help, what do they need to do first to come to you? What do they need to bring to you? And what are some of their options they need to cover?
Sure. So I guess in terms of when they're coming to us, what we want to see is that they've had to think about what their goals are, what they're looking to achieve. Because at the end of the day, we're just here as brokers to make people's dreams happen as often as we can.
Yes,
we can't always do it, but
Yeah.
as often as we can, that's what we're here for. So, I mean, really understanding their situation and what they're hoping to get out of it is key. I guess if we are looking at downsizing in particular, where they may not have even listed their property for sale yet, and, it does happen. You might just be reading through the paper, you're flicking through, a couple of properties in the section, and then next minute there is your dream home or your forever home.
Yes.
The kids might have grown up in particular, and you don't need all of that space. You don't want to clean, 5-bedroom house anymore.
Cool.
It happens all the time. And so we're not asking that people have all of their ducks in a row, but we will then need to have a look at what the equity position is. That's probably the most important part of understanding.
So the first key learning there is if you're looking to downsize and you have an existing mortgage, before you put your house on the market, before you actually go and look in the paper or go onto realestate.com or come to me as a buyer's agent to find a house, come and see a lady like Chloe here at MoneyQuest and say, help, what do I need to do so I don't get in this bad situation? That'd be a fair call?
Absolutely, yes. Ideally, yes. Come to us when you know that you are thinking about downsizing. But in a perfect world, yeah, that's what we would see every day. It doesn't always happen like that, though.
Coming to you on the Friday when the auction's on the Saturday, the house you fall in love with doesn't work?
Probably not ideal, no, because we will need to get valuations done to determine equity positions, particularly if we are looking at, you not being able to sell your property before you're purchasing the new one, which would then entail us looking into bridging or relocation loan or no and debt finance, however you'd like to, I suppose, pitch it, whatever you'd like to call it, but that's what we would need to look at. So we really need to, I guess, have a couple of days at least to make sure that we've crossed everything off, make sure the equity's there to do what you need to do in that,
So a lot of the brokers I speak to say the worst thing they hate is when someone comes to them to get a loan and they say, yes, we have this account, we only have this loan. And then as a true professional, and I know you do this, you do your credit checks so you can present the best possible outcome to your lenders to get the best possible outcome for your client. And then you find the car loan that hasn't been paid or it's still sitting there. Now, this is what people forget. If you can have a car loan you paid off, but if you don't close it, it's there as a full loan, correct?
Correct. Yes.
And the bank account that the credit card that the wife didn't tell the husband that she had that she's been paying off using something else.
Sometimes the husband has them too.
Yes, sometimes the husband has them too, yes.
Yeah.
So when someone comes to you in that situation, honesty is the best policy when it comes to all of your lending, what you've paid off, what you haven't.
Absolutely. Yeah. So the clearer picture that you can paint for us, then the quicker that we're able to help you. Though in saying that, for our clients, whenever I pick up a file, I always request that the clients sign our privacy, which then allows me to get a copy of their credit report. Because, years ago, Harvey Norman, everyone was picking up the Go Latitude cards or whatever they've changed to now, GE Money and all the rest that they've been known as over the years. And the reality is that for a lot of clients, those accounts are still open. And we just don't realise because they stopped sending us cards. We don't get any statements because we don't use them. And so you don't even know that you've still got this active credit facility available to you.
Can someone get that themselves?
Yes, absolutely. Yep, everybody is entitled to go and get a free.
So you can go and get one of those and then bring it to someone like you to say hi, and you'll help them if they've got something there that they've paid off years ago but still there. You'll help them and okay, this is how you get rid of it.
Absolutely.
So
Yep, definitely. Everybody can get your free credit check.
Yeah. So talking about the people who have a mortgage and they've found the house and they've got that in between time. So sometimes it can only be a couple of weeks, sometimes it can be a couple of months. How does that type of finance work? Do they have to be paying principal and interest repayments in between, so they end up having two lots? How does it work for the layman who's never done it?
No problem. So I guess each lender is a little bit different, though I guess as an overview, what typically happens is if you've got existing lending on your home, then it's basically that plus any costs associated with the new purchase.
Yes.
And some lenders will then require a small buffer as well, and that will be your overall debt that you hold with the lender, which is sometimes referred to as the peak debt.
Yes.
And then you may or may not have end debt depending on the scenario.
We're going to get to end debt in a minute,
we will,
especially that's with the big one with the downsizers. So.
Yep. But from there, in terms of repayments, a lot of lenders just capitalise the interest. So there's actually normally and typically no repayments required during that bridging period.
And so while interest rates do bop around quite a lot, that interest rate is normally a little bit higher than a normal until you've done all the settlement and then you come back to a normal rate.
Correct.
Is that normally how it works?
Yeah, so typically the rates are a little bit higher. The fees can be higher, and I know that sometimes that does catch people, I suppose, a little bit off guard.
Yes.
However, I suppose on the flip side, and whilst I'm not here to encourage people either way which way to go, I am just here to make sure that everyone has the opportunity to purchase their dream home at whatever point in time that is,
Yeah.
I suppose it is imperative to question what that cost looks like.
Yeah.
If you miss out on your dream home, would you have preferred to pay perhaps the fee and the slightly higher interest rates to make that happen? Or with market movement and
Yep.
things like that, Rob, I mean, you'd be best to tell us about that. Is waiting 6 to 12 months going to potentially negate that fee?
Yeah.
Or if you had have paid the fee and the higher interest rates now, is that going to see you better off long term? So, we can't answer that as
I don't think
mortgage
anyone
brokers
can
for
really.
you, but it just comes down to, I suppose, what you're prepared to pay to secure your dream and potentially forever home too.
So what happens in this situation? I've got a house, I've got a small mortgage on it. I found a house up the road that's going to auction. All my equity and all my money is tied up in the bricks and mortar.
Yep.
So, and everything, all my cash has been poured back into paying my marketing costs, getting this house up. But I need 10% because, as we know, especially in New South Wales and most states, at auction, once the hammer falls, that's it. You're up for 10%. What are the options for someone who is maybe got enough equity, can finance that loan to buy the house at auction, which happens in many Southeast Queensland, most of Sydney now, and most higher end homes are under auction.
Sure.
Or if there's a lot of competition for a home, they're under auction. So how do they pay for that 10%? Because everything's in their other home.
2 ways to do it. Depending on the lender that you've got your current mortgage with, we can look to do an equity release or a cash out against the equity in your home.
Yes.
And draw that out as a second home loan
Yeah.
against that property. Or deposit bond. You can definitely take a look at that, but I would just always make sure to double check with the agent before going to auction that the vendor is
They'll
happy.
accept a deposit bond.
Correct.
So how does a deposit bond work if you don't know what the price is because you're going to auction? So can you get deposit bonds now that have a variety, like you've got approved to 100,000, 150,000 as your 10% deposit? Is that how it works these days?
So there are now flexi bonds that some deposit bond companies are providing, which is where you haven't necessarily found the property, but you know that you're willing to pay up to
whatever
X amount,
Yeah.
And so they will approve it based on that.
Yeah.
And now they're actually even doing, I guess, no upfront. They're calling it fee-free. It's not fee-free.
Nothing's fee-free.
No, nothing is. But where you don't actually pay the fee until the property has fallen under the hammer, and then that way. You're not having to, I suppose, pay out of pocket and then be reimbursed should you not find anything.
So the second part of today is, and this is as us being who we do, where we go and find people, find them their homes and find them everything like that, being a buyer's agent, we're having people coming us to now who don't have any debt and they're looking to downsize so they can either go to semi-retirement, retirement, they want to be able to, what we call them in the industry, a lock and leave. They can go from a big home to a smaller home that still gives them everything they want, but they can lock it up and go away for 2 months, 1 month, 6 months, it doesn't matter. They don't have a mortgage, but they've got to sell their house and buy a house, and the timing of that sometimes works, sometimes doesn't. So, and I know you guys love to help people get into them. What is out there now for a client? If I came to you, Chloe, and said, I've got these people, I found them a house, but their house isn't really ready to go yet. Yep. How can we help them? How can we get them into that new house while we're waiting for this one in the process of selling?
Sure. So we can definitely look at bridging or no in-debt finance.
No in-debt finance,
in that case. And I guess the beauty of it is particularly with downsizers, if they are retired, may not necessarily want to go through, do an application, may not necessarily even have, I suppose, the income and things like that.
No, they won't.
However, because there is no end debt, then there is no serviceability calculation. So there's no requirement for you to prove that you can repay anything because at the end, which is what the lender's looking at, there is nothing to repay.
So it's like a short-term bridging finance.
Yeah, absolutely.
And so does the interest and all the fees then get capitalised onto settlement?
Yep, that's right. So it's all capitalised onto the bridging debt, which is essentially just all of your purchase costs. If you don't have an existing mortgage, then there's nothing to tie into that. So it would just be all of your purchase costs, including stamp duty if necessary, everything. So you don't actually have to pay a single cent. And then once you have sold your existing property and you're clearing that peak debt with the interest capitalised, then that's it. It's all done and dusted. So you don't need to worry about making any repayments in the meantime, whilst you're potentially trying to move into your next home and get your current home ready for sale,
Yes.
and all of the stress that comes sometimes with that.
Unless you're using a good buyer's agent like me, then there's no stress.
Absolutely.
I've got to give myself a plug occasionally now.
Of course, but I mean, I think for everybody, when you're selling, perhaps the family home that
Yeah.
your kids have grown up in and they're no longer there,
It's
and
an emotional
you're moving
attachment.
on. Absolutely. So yeah, I think if there's one less thing that you have to worry about, then why not make that happen? Where you don't have to worry about aligning settlement dates and trying for simultaneous settlement and rushing to get your property ready to sell when perhaps you're not quite ready to yet.
Now, this is a curved one. I haven't told you about this question, but I know you're going to know the answer. There's a lot of developments out there called over 55s. Now, they're not nursing homes, but they're over 55s and they've got entry and exit costs. If someone decides they want to buy a unit that's come on here down in beautiful Wollongong where we are today and they're selling their place, can no end debt finance be used to buy into one of them if they're getting title?
Well, I mean, I guess at the end, because there is going to be no end debt, I think as a case by case,
Yes.
it would be an exception.
So it's not necessarily a no, it comes down to, because all these over 55s, and this is where I ask people to really do their due diligence because they're all so different.
Yeah.
Some are a community title, some you get full title with just entry and exit fees, and some you get no title.
Correct. Yeah. So I guess that would be the crunch point for the lender, because they would need both titles during that
Correct,
bridging process.
100%,
They're going to take the title of your existing property plus the title of the new purchase property to minimise their risk. But then again, I suppose it also would come down to whether or not what the equity position of your existing home is.
Yeah.
Because if you have significant equity in your existing home,
Well, I'm talking about the people who have
The
no
lender.
debt on their home. So
depending, I suppose, on what the changeover
yes, the changeover is, yes. 'Cause
is.
sometimes it can be the other way.
Correct.
Yeah.
Yes. Yeah. But I would suggest that if there was significant equity to cover all changeover costs and still have, a decent buffer there, that a lender may even consider doing that. But again, it would be
So
case by case on an
you sit
exception
down
basis.
with clients like these or people with no end debt, they're going from a 5-bedroom house to a 3-bedroom house. You go through what we call in this industry the carrying costs. So every week it's capitalising roughly at this amount. So they know when they're selling, well, if I wait too long and I've got a fairly good offer and the agent's going, this is good, yes, you can wait another month. You're not necessarily going to get it. If you add your carrying costs,
Yep.
it actually works out cheaper to take a reasonable offer. I never say give your house away, but a reasonable offer rather than you will help them through all that so they know exactly
Absolutely.
and make them, because it is an emotional time for people.
Yes.
I've just done a downsizes for people who went from a very large home on the Central Coast to a 2.5-bed unit near Homebush. And so absolutely, if I could talk of a dream client, they've been lovely,
Yeah.
but no in debt. And luckily they could release and pay, they were fine, but the emotional side of it can get to people and I don't blame them.
No.
It's a big change.
Oh, absolutely. Yeah. And I mean, as parents, I suppose we all know, right? Like, yeah, you watch your kids take their first steps in that house and you do form those emotional attachments, and the house doesn't grow with you, I suppose, which sometimes is
It
hard.
sometimes does. Yeah.
Sometimes it does. Yeah. So I can certainly appreciate there is that emotional attachment and that people need to have all the information to make those informed decisions. So yeah, absolutely, we do map out for them what it looks like in terms of the capitalised interest. We typically work in 6-month blocks is
Yes.
how I like to do it. If you sell your home in 6 months, this is what it's going to look like. And then if you sell it earlier, great. And then we've at least outlined what that worst case scenario looks like.
Awesome. So we're going to wrap it up here shortly, but now I have the fun question that nobody gets pre-warned on.
Okay.
So if we're at your funeral and they've said to everyone around you, what song should we play for you to leave your own funeral at? What's the song that best represents you? Is it a Motley Crue? Is it a Cyndi Lauper? Is it a Tay-Tay song?
It would have to be Shania Twain, Man, I Feel Like a Woman, because that song just makes me want to kick a door down. I just think, yeah, absolutely.
So is that in a good way or a bad way? So
No,
if I come
in
up
a
to your
good
office
way.
and you're playing that, it's safe to walk in.
Oh, yeah, absolutely. It means we're having a good time.
We're having a
I
good
just
time.
think, when we hear "Let's go, girls," it just makes me feel like let's kick the door down and just get out of here. Yeah,
That's fantastic. So we're going to wrap it up. Anyone listening to this podcast, how do they find Chloe at MoneyQuest? Where do they find you? How do they get in contact?
You can find us on Facebook. We're across all social media platforms. If you want to give us a buzz, feel free to do that. The number is 02 4229 5459. Feel free to reach out. We're happy to answer any questions and help out in any way we can.
That's fantastic. You've done a great job today.
Thanks, Rob.
And you have a great week, everyone. I hope you've enjoyed this. And drop us a line if there's something you want to know and you want someone to come and talk about on the podcast. Apart from that, have a groovy week.